Hi, this screencast is looking at how to prepare a statement of changes in equity for a company. And to do this, we're looking at a past exam, an exam from May 2016 for Financial Accounting 1B. And in Financial Accounting 1B, question 1, it gave us a statement, a trial balance, and asked us to prepare three things. And so we have two screencasts already. The first one looked at the format for each of these sections. The second screencast looked at part A, how to prepare the income statement. And this screencast is just going to concentrate on part B, the statement of changes in equity. So you go to your trial balance and you look for the equity in the trial balance. So here are equities: the share capital, ordinary share capital, preference share capital, and then the different profits which are divided between retained earnings and a general reserve. So there are headings. And that goes in landscape. So we put our heading in for part B, statement of change in equity, and then I'd nearly leave 5 kind of spaces. You're going to have space here for description and then maybe a note or a working, and then each of the equity gets a column of its own, and they're all in millions. And the first line is the opening balance, and we get that from the trial balance. So just make sure you don't or do not include debentures, because that's not part of equity. So it's just these sections. And sometimes the reserve, as I said in the first screencast, it could be a different name. So normally this is called retained earnings or retained profits. This may be called a different type of reserve, but it'll be something reserve, like buildings reserve, acquisition reserve, goodwill reserve. So you're looking for ordinary share capital reserves, retained earnings or retained profits, and then preference shares. They're the opening balances, 110, 34, 40, and they just get added to our work. And we only have about 5 more lines to do, so it's pretty quick to do this. Most of the changes are going to happen under the retained earnings column, because this is the one that changes. The object of this is to find out what's the opening balance at the start of the year, and we're going to end up down here with a closing balance at the end of the year. So in between we have to show what impacts on the opening balance. And the first thing that happens is our retained earnings gets increased for any profit made this year, or gets reduced for any loss. So we go back to part A and we see if what was the profit after tax from part A. So in part A we did the income statement for this company, and at the very end our profit for the year after our expenses and interest expenses and tax was 22 million. So we just add 22 million into here. So 34 plus 32. Next, we reduce our retained earnings for any dividends that we've paid out, or the company has paid out for the year. And there are 2 general types of dividends. One is from ordinary shares and one is from preference shares. The easiest one to calculate is the preference share dividend. The ordinary shares have 2 types of dividends. There's interim dividend, which is dividend paid during the year, which will be shown in the trial balance, and a final ordinary dividend, which, if there is one, will be talked about in the notes to the question. You have to work it out. So the 3 dividends, I'm just going to show them here. So whatever figure we get for each of these, it's going to go in under retained earnings as a minus, because what all it's doing is a dividend is where the company pays out some of its profits to the shareholders. So retained earnings is going to reduce for each of these things. So interim ordinary dividend, if there is one, will be in the trial balance. So we come down along the trial balance and there is no interim ordinary dividend, so it's 0. Next, final ordinary share dividend. And the information for this is going to be in the notes to the question, so you have to look down through the notes until you see a final ordinary dividend is here, 6 cents per share. So to calculate this, we need to multiply the number of ordinary shares by 0.06, and that'll give us the final ordinary share dividend. So to calculate the number of shares, we come up to the question and the shares are worth 100 million. The nominal value has an impact here. In this question it's €1, so there must be 100 million shares, because 100 multiplied by 1 gives you 100. But sometimes this is different to 1. So you should always divide them, to get the number of ordinary shares, divide the money here by whatever the nominal value is. So the 100 divided by 1 gives 100. So if the nominal share value here was 50 cent point 0.5, it would be 100 divided by 0.5 and we get 200 shares. Or if the ordinary share capital was €5 nominal value, to be 100 divided by 5, which would give 20 shares. So that's why we do that. But in this instance there's 100 shares. So now we know there's 100 shares. We multiply the number of shares, 100, by 0.06, which was the final ordinary dividend, to give the ordinary dividend a final of €6. And that's what goes in to the worksheet. So that's been in under retained earnings under 6. It's important you put under retained earnings. If you put the 6, some people make a mistake and put the 6 under ordinary share capital. That would be wrong. So don't do that, because it doesn't affect the ordinary share capital. It reduces the retained earnings. Next is the preference share dividend. And the preference share dividend is very easy to calculate. It's exactly the same way as we calculate the debenture interest, where we multiply the percentage by the amount of borrowed. And we got 8 here. In this instance, investors or shareholders have bought 40 million worth of shares. The return is 5%, so 40 multiplied by 5% is the preference dividend. And when we multiply that out, it's 2. And we just show it there. And once again, just show your work, and it doesn't take much. And at least if you get something wrong, it'll show us how you got there, and you might get marks for process. But if you put no working and you get the figure wrong, well then it's very difficult to get marks. And the last thing that comes out of retained earnings, and it's the only entry that will affect one of the other columns here. At this level you're not going to get any new shares issued or any share premiums, so you don't have to worry about those. More advanced questions would have that, but not at this level or at this stage. So the transfer to general reserve, you're going to look at the workings in the question, the notes to the question. And as we come down along, down near the end here, directors have decided 3 million transferred from retained earnings into the general reserve. So we're just moving it from one into the other. So it's a minus here out of retained earnings, but it gets added into the general reserve. And now we're at the stage where we can calculate the closing balances, which basically is add up all of these and take away. So 34 plus 22 minus 6 minus 2 minus 3. And that adds up to, that doesn't change, 100. The general reserve started out at 10, went to 13. Retained earnings now adds up to 45 million. And preference shares hasn't changed. And that's the end of the statement of changes in equity. And when we're doing, or when you're doing the statement of financial position and there's a section for equity, these are the lines that go in for equity, and it's the closing balances you put in for that. But I'll come back to that when we do that in the next screencast. So thanks, and I hope that was useful.